Thank you guys for coming out to the first panel of the day. Really good to see you. Where the smart money is flowing. Today we're going to be discussing investment trends and deal structure in the current beverage landscape. On behalf of the entire panel, we wanted to ensure that this wasn't just high level theoretical mumbo jumbo. We wanted it to be practical, based in reality, and to be a discussion that operators and founders can actually use. My name is Gary Schneidkraut. I'm the founder of Beverage Alcohol Consultants and have about 20 years of experience in the adult beverage industry, from distributor execution in Metro New York to supplier strategy to commercial planning with brands of all different sizes and categories. So have had a front row seat to see what accelerates growth, what silently burns capital, and which playbooks endure when the market is tested. So enough about me. I'm going to let the panel introduce themselves.
Hi, I'm Ashley Ferguson. I am a partner in the Beyond family of companies. We have Beyond Brands that services food, beverage, supplements, beauty, and pet products with very prescriptive consulting services tailored to what that brand needs at the growth stage that they're in. We also have Beyond Spirits that services alcohol and alcohol adjacent brands, and an incubator called Beyond CPG that's going into its 7th year this year, and we're really excited to make an announcement that we're going national. My background specifically is on the operator side. I have participated in transactions for IP-backed platforms, B2B commercialization, globally licensed consumer products, and most recently excited to take my expertise into the CPG space.
Hi, thanks. My name is Brett Finkelstein. I co-founded an investment fund in 2015 to invest in the legal cannabis industry, mostly in what today is now a robust cannabis economy. We launched a second fund in 2018. The fund is called Fido Partners. We invested in an early stage company in the picks and shovels and ecosystem of the backbone of the cannabis industry. We made about 35 investments to date, followed on with some other investments as well. Last couple of years, we've been focusing on getting closer to the consumer. We're looking at some brands now. We've done a lot of fintech, data, payments. If I had a whiteboard, it would be everything in the cannabis, even probably hemp economy, other than cultivating and dispensing. Before that, we were investing in building companies in CPG. Kind of that's how I got my foray into cannabis, looking at it as an ingredient in an industry that we wanted to help with capital and human capital. Like I said, we're activist investors, and we're looking at the next frontier of where this industry is going.
Good morning, everybody. How we doing? Let's try that one more time. How we doing, everybody? All right. Nice to see everybody. Was here yesterday. My name is Chris Cuvelier. I am the CEO of Beyond Spirits and the president of Beyond Brands. I work with Ashley and a couple other people here in the room. This conference is kind of the perfect fit for us because on the Beyond Brand side, we work in healthy, functional beverage. So think coconut water and adaptogen drinks and energy drinks and things like that. On the Beyond Spirit side, we have deep understanding of the categories, of the distribution network, et cetera. And then on a personal note, I used to be the head of beverage and on the executive team of a major cannabis company called Caliva. So 6 years ago, I was working on things like onset and offset. So the experience of cannabis was similar to that of alcohol, of how quickly it hits you, and then how it would actually come off. Because back when we started, it was a 50 milligram shot, and if you had one, you'd be on the couch for about 8 hours, and not good for the consumer experience. And selfishly, from a business perspective, not good from an operator standpoint, because you want that recurring revenue of selling multiple beverages and different uses occasions. So excited to be here and excited to see where this discussion goes.
Hey, good day, everybody. Chad Zani from Morales Beverage Group. Sorry about the accent, only one I got. I really love this category. Morales Beverage Group is the probably the biggest statewide distributor currently in hemp. In the last 6 months, I've spent a lot of time with a few different family offices about, I made some noise on LinkedIn, I guess. And, so I've now been advising them on like which of the companies like I'm distributing or what I'm seeing like that they want to come in and play with, because like who better to tell you which brands are moving than the distributor. So excited to be on this panel. Have a little bit of imposter syndrome after those intros, not gonna lie. Just a convict from Australia doing my thing. But yeah, super excited to be here.
Lovely accent. Is that Wisconsin?
South Wisconsin.
South
The
Wisconsin.
South part, yeah.
I thought I heard it. I think an important thing to consider, and we had discussed this as a panel earlier this week, capital doesn't fix operational gaps. Ashley had said it actually amplifies and magnifies the gaps. So I'd like to hear the panel's thoughts on key differences between raising capital and actually being ready for capital. Because I think there's a very big difference.
Absolutely. Yeah, this is something that I had brought to the table for sure. I mean, I think that so many times people are think that they're so ready for that capital injection, but I think it's really important to understand that the second that you take that money, you haven't necessarily bought time, you've bought expectations. And I don't mean that in a negative way. I mean it in a way that this is where the alignment between you and this investor that you've brought into your company, it's a long-term relationship, and I think that really understanding that is important. And I think that positioning yourself as a founder that isn't giving into operator optimism, which is not something that investors want to see, especially when the stakes are so high and the expectations are there, but really showing how you are anchoring to economic realism. And this can be from a lot of different ways. This can be understanding that the beverage space is an expensive one. The way that you are going to market is really, really important, and understanding what that cash flow requirement is just to get your first round of inventory, to understand your MOQs, and to understand how this can change for you as you scale. So as you're taking in that money, do you already have your backup suppliers ready? Do you understand how your margins change? Is there a clear path for a margin expansion plan? Being able to be the founder that sits with an investor and doesn't talk about how great the brand storytelling is, and instead talks about how great your path to profitability is, and how that's just bolstered by your brand story is going to make you really stand out. And I think that it's also going to help you align your own expectations and make for a much less stressful investor experience.
Yeah, and to build on that, I think it also depends on the stage of your company, right?
For
So
sure.
at the beginning, and I'll be very curious to look at this through your lens and hear your thoughts. When we're advising startup companies, you have to start with the goals, right? As a founder, what are you trying to accomplish? Number two is your strategy. So what is the strategy to go accomplish those goals? Number three, who's the team that's going to help you execute that, right? And the more experience you have there, whether you have a founder with superpowers, right? Founders usually have something. They're really good at sales, they're good at marketing, they might be a finance person, right? A lot of people get in beverage, which, to Ashley's point, a lot of money goes towards inventory. It's not a cheap person's game. There's a lot of capital for beverage that is needed. But when do you layer on that team that has that experience? Then what are all the other expenses in the business? How are you going to support the distributor? How are you going to get boots on the street, right, to merchandise those shelves? How are you going to get liquid to lips? All these things. And so really having a good investor deck with a financial model that ties back to that, that shows you your capital needs. And then when you're talking to the investor, what we always say to people, and we're on a lot of investor calls with a lot of our partners, it's, look, what I can guarantee you is this business model is not going to look like this. It might take us longer to get into the distributor because of timing in their portfolio. We might not hit this, metric on D2C. But what you're doing with the investors, you're building confidence, right? Do you have the right approach? Are you building your revenue numbers from the bottom up? Door count, timing, velocity. What are these assumptions built on? And a lot of times people say, hey, I've got this investor deck. And then when you get underneath it, it's like you haven't done the strategy work beneath it. The investor deck is the last piece. You have to do all the work up front. So I'm very curious to see how you look at these brands and where you wind up investing.
you guys hit on kind of the business end, and I'll just talk about the capital end because I can't do what we do without people like you guys, and I know they're associates and partners for 20 years, and we work together on some licensing brands. And there's that disconnect, and I think that you guys brought up like a founder. Founder doesn't necessarily mean a CEO, and what Ashley hit on, like I want to know what the capital is going to be. I'm like, we're not like their rich dad when we invest in companies. It's not like try it out and we'll see what happens. And a lot of times we sit together with founders and they say, well, this is what we're going to do in the next round. And like Ashley said at the beginning, too much capital sometimes is a problem. Like we would like to see a company bootstrap, and we will fuel capital, but we will fuel capital for growth and inventory and hiring. Like we want a founder to be a real leader, to inspire management, to understand the pitfalls, to when someone says sweat equity, like I want them to sweat like they can't pay their mortgage. Like this is real problems that people are going to have and needs. And if we fuel capital, we want a return. And I think that a lot of founders see this industry in this category as more passionate and seduced by this plant, and they could make things happen, they could do things differently, and they could build a brand. And building a brand that these guys know is not just a label. It's really building the core essence of what this is going to look like to the founder, to the public, to the consumer. And I think that the kind of a stumbling point that we always find is that 9-letter word of evaluation. Like a founder thinks that their valuation is here, where they just have an idea, and if they get the total addressable market, if they get into every store, this is where they'll be. And that's where the kind of the alignment or the misalignment happens with too much capital, because they do stupid shit. And we want to see like real numbers and real growth, and not like adjusted EBITDA. Like we have a fiduciary responsibility to our investors. They're giving us capital to find people out here. And we have to make sure that they're going to be good shepherd of that capital and help grow. Like we like to get into speed up like conversations of at the beginning. We want to align ourselves. Right now we're not aligned. Like if someone gives us a deck, we're on the opposite side of the table. Like we're gonna fire questions at these people. We would like to be partners with people, and then we're on the same side of the table to grow the company. And that's where I think that like guys like this, companies that you really have to find the right advisor, a right legal team, a right accounting team. It's not just like we'll figure it out and we'll get into stores. There's really like a whole essence behind building a business, and this is just one end of it. So I think that we're here to help, but it's going to take a village to move this industry.
And building on that, I think it's also important as a founder, know what you don't know and surround yourself with people who do. That's probably one of the biggest downfalls I find is founders who maybe you crushed it in Silicon Valley or another industry, and you've got this money and this ego that you probably earned. In this highly nuanced, compliance-driven industry, hang your ego at the door, surround yourself with the right people.
Yeah, I think everyone's just said great stuff. I hope everyone's paying attention. One thing I think is important from nothing costs more to move around America than water, right? And I think everyone just fundamentally blanks on how expensive that last mile is, right? And so, as a distributor, I've seen brands come in, and the great thing about the alternative beverage world right now is a lot of it is unregulated, and in the state of Florida, you can self-distribute. They're talking about killing that July 1, but I've seen brands that have done that sweat equity and have worked and self-distributed, and they're now coming to me, with a brand that has some recognition. And then I've also had, the Curaleafs and the True Leaves rock up with, bottomless pockets and brands that didn't really hit or haven't hit. And so, it's not about the money. We're in beverage, right? It's big T for taste and big N for nutrition, and again, some founders get very caught up in their own story. But, beverage is expensive, but, the flip side is if you can build it, the exits are monstrous. Like everyone's in love with the Poppy story and the, Alani Nu and these sorts of things, but like 12-year-old business, 14-year-old. Everyone's psyched about Beatbox, 14-year-old company. So, be in it to win it, and it's a marathon, not a sprint.
You know, what Chad just said there, that's something very interesting that I think is super relevant for this room. Bottomless money, right? And the big companies have brands that don't hit. That is why big companies buy small companies, right? All of you in the room, if you're a beverage entrepreneur, I've been there multiple times, you're gonna tinker because you are putting in your sweat equity, right? You have mortgaged your house. You're doing all the things to get that initial capital. And I think there's two things in this. One is you got to figure out what those KPIs are. So when you actually go to a distributor to get that distribution, you can say, hey, I've got velocity. I know who my consumer is. You've looked at their portfolio. You're like, hey, I'm going to be additive to your portfolio. When you're coming to the capital side, especially if you're at that second phase of capital, right? What are they investing in? They're looking at the category. They're looking at you as the operator. They're looking at those key KPIs. And what Ashley said up front is exactly it. My margins are here today. Here's where I go with scale, right? Here's the velocity. I'm not in 10 states, right, doing $1 million a year. I'm in one state doing $500,000. And by the way, I'm only in 2 markets in that state, and I've gone all in and deep. And look at the velocity I've done with no money. Imagine what I can do with capital. And by the way, this is my plan, what I would do with the capital. And I think those nuances are really, really important because we have as smaller operators the opportunity to exit to bigger people because we're going to do the hard work down here at the beginning, tinker until we actually get it right. So there's that whole thing like fail as fast as you can. If you learn, go do that. Like fail, make those tweaks, hang your ego at the door, right? And then go get the money and then put the pedal down.
And in the current market, there's a lot of dependency on brands to secure that next check. I think in both alcohol and non-alc intoxicating beverage, there's going to be a lot of market rationalization this year. The brands that have not built a sustainable model or are so reliant on that next check coming through, they may not be here in a year. So my question, and I'd like to start with Brett actually, is capital still available in 2026, and how is it being deployed differently today than it was 3 to 5 years ago?
It's a challenge. I mean, capital is going to seek the best companies. I think, again, the valuation is going to be, because now we have data. Like when we started investing, and I'm going to just talk about the cannabis business, and it is, a plant in one plant, and it is adjacent to what we're talking about here, or hemp-derived or alternative beverages, because cannabis is an ingredient in whatever product you're going to make. But now, 8 years into, or 10 years into a legal cannabis market that's robust, and it's almost in every single state, medical or recreational, or even CPG, there's data. Like you could point to a drink and say, this company was in, 50 doors, and started out, and they moved the needle, and they got more capital. But money is tight. Like, we invested, close to $100 million in a few funds in the cannabis business. It's not like flexing myself to you guys. We have no money. Like, we have no liquidity in those transactions to date. Our investors aren't unhappy, but they're not happy because time kills all deals. And we really now have to look back at these investments or be more selective. Right now, we don't chase deals. I think at the beginning of our life cycle in cannabis, new plant, new category, we can make it work with activist investors, being activist investors and capital. But right now, we look at the industry and we chase people. We don't chase deals. We chase founders. We chase founders that are going to become CEOs. They're going to inspire management. They maybe have some sort of proprietary technology in a beverage space or in a CPG space. But capital is totally tight. I would say to most people now, you're going to have to really bootstrap a company, align yourself, do trade deals, find the right people. I see a lot of deals getting done more on the debt side than I see equity coming into the market. But capital's totally tight. I think it's going to free up because I think this category is big. But I think that, maybe touching on this, it's kind of like the elephant in the room, there is that regulatory risk. Like, November 26th happens. I don't think, people are, it's going to really, I mean, I've been in the market, again, the cannabis market, that could end, you know, with Jeff Sessions, we thought. It didn't. I don't think the industry ends, but there is that regulatory risk as far as execution risk. So you marry that together, it's a small, narrow focus to find capital.
I think that that's everything that you said. Totally agree and understand. And I think that Chris and I have a different sort of vantage point on the market because we don't just play in non-alc beverage, or we don't just play in alc or alternative beverage, because we're really seeing the market from a macro lens. When we start looking at things, and I think that, Brett, this is exactly what you were saying, that investors aren't chasing trends anymore, they are investing into durability. And I think that that's really the bottom line there. And when you look at from a macro perspective in the market, there's $2 trillion worth of dry powder available in the PE space. We know that venture funding is down 40 to 50% than when we saw in 2020 and 2021. We're seeing M&A transactions slow, but there's also a really clear guardrail of what makes an M&A transaction happen now, and it's all tied to EBITDA. So while yes, the money is less cheap than it used to be, it's just more selective. And I think, don't get hung up on, is it a fund? Is it a venture fund? But maybe it's not a fund for you. Maybe it's a high net worth individual. Maybe it's a strategic family office. I think that, when we go to shows like this or in places like this, we're only looking at who's right in front of us. And working with our clients, it's been awesome because we can understand where there are people that have a little more risk appetite or have something specific that they're looking for to round out their portfolio in a more interesting way because of strategic relationships that they have at the table. So having those outlets like a Beyond or, someone that that can help kind of guide that and navigate and open up a bigger circle than the funds that everybody knows is kind of a good way too.
Yeah, and I think the earlier stage capital coming in, like Molson Coors just made the announcement of what they're looking to do, and they're looking to, I think the number was somewhere in the $200 to $350 million range. That's the size acquisition that they're looking at. And the game has changed, right? 4 or 5 years ago was top line growth. The more you could drive top line growth, the better. Today, a lot of these bigger companies that are acquiring are down, right? Especially in the alcohol space. So this alternative beverage market, if you can go get the right capital, go build that, and then demonstrate profitability and get to some sort of scale, now all of a sudden you're positioning yourself where if the strategic initiatives of some of these major acquirers are looking at your category and your consumer and you are profitable, right? You're going to be in a position where they can buy you, cut out everything, increase the profitability there. But I think there's phases of looking at this. Startup capital, which I would do as small as you can to get that proof of concept, then go get capital where you're coming at least from somewhat of a position of strength and not a startup. And then take that capital and maybe one more round to get to profitability. And if you can do those things, and I was having coffee with someone this morning, has a $2.4 million business in the space, and they're profitable. That's huge, right? You're in control of your own destiny. So if you can take that capital, get to profitability, redeploy that capital smart to continue growth, that's the ultimate situation. And then you're positioning yourself for a potential future acquisition, even though, let's be real, they're rare. Like acquisitions are quite rare. So picking those winners is really the key.
I would just say, from a real world, Florida perspective, right? I love this state, moved here in 2022. It's like 10 countries in the one place, right? Which I love because it makes it interesting. And yes, you all have different accents, by the way. It's funny how Americans say they don't have accents. I'm like, bullshit, you don't have accents. So brands mess up by going wide instead of deep, right? And you live in a state, and if your brand is in this state, dominate Miami. I'm not talking Miami-Dade. I'm talking Miami, right? You come to me with, we're in 35 restaurants in Miami, you have my ear, right? So, you don't need, you can get a lot of progress by keeping it tight and local. And that's also where your strength is. You walk into a business and you say, I live down the road and I've made this product, right? They're going to give you a shot more so than some prick from, Ohio or whatever. I can't even say this place. So the point being is that, the potential to be investment ready is a lot sooner than you think, but you got to stop thinking you have to launch into 12 states that you can't service anyway, right? Like, you just dominate that market. And look, the hottest market in hemp right now is Palm Beach. Like, Palm Beach, right? Okay, cool. And who doesn't want to play with it? Miami, right? It's devil's lettuce down there. So it's you just got to know the market and again, depth over width, because that's what they can come to you and go, we're killing it. Like, help us expand. And I'm sure you are much happier putting money into a brand that's like dominating a market versus someone with an idea on how they're going to go and have market domination, right?
Yeah, like a proof of concept, and I might say a dozen times a day, go an inch wide and a mile deep. That right there, to own a market or a piece of a state, you're able to build that proof of concept and what works. Also, if you overextend yourself, you're not going to be able to service markets you're going to, and God forbid something happens, you have to do a recall. Being in 46 markets with Southern Glazers, guess what? That's national news. That'll bankrupt you to fix. However, if you've focused on a particular state, a part of a state, a region, you learn your lesson and you can fix it.
I think that also, and to be the annoying, squeaky finance model wheel for that investor deck, but also I promise if you follow that model, not only is it great for all the reasons that they're saying, but your cash flow burn is going to be so much lower. And then he's going to go, okay, yeah, like, let's have a conversation about this. And if you have that, plus maybe you're open to some creative deal structuring that maybe we haven't seen in the past, but investors want to protect their downside right now. So if you have that, plus, let's talk about what equity structuring looks like, or let's look at something a little more creative, it's more likely that you're going to get the yes.
And so the final 2 points that we have before Q&A, I think, are what a lot of the audience members are really looking to hear. What the hell's actually getting funded? In this current climate, what is actually getting funded? And what are investors looking for in a brand that they'd be confident in backing it?
I'm going to hit on it again. I think the concept of going deep really works. And again, I'll use the example of Trulieve, and you mentioned it before. I remember going to conferences early on in the cannabis world and sitting with the top bankers that were in the space at one time, and I would have like a name tag, and it would say Brett Finkelstein, Phyto Partners, Florida, and they would say, oh, that's where Trulieve is. And I said, yeah. They said, they're only in Florida. I'm like, yeah, because everyone else that would pitch them put a map of the United States with pins in it saying, we might be here soon with an application or a license. And you watched one company take the industry by storm and making real money. But I think also now when you talk about, the capital and capital inflows, it's really going to be about management, team. I would like to see like velocity of sales. I would like to see where that brand is going. I don't like to sit on the side of at the end of a table and listening to a issuer pitch us about next stage of capital, because I want them to focus on building the business. And if they do that, capital will flow. I mean, it is tight, and there's other industries that are like hot now, AI, data centers. This is kind of, in the middle road of finding the alt beverages. But again, there's huge successes. I mean, you see Celsius out there. I mean, I'm been in Florida 25 years, and I was here when that company founded. It was a fucking zero. That was a dead company. Dead. I know the founders, a husband and wife, the first distributor, first marketing people, their equity was wiped out. They figured out, they were either building something or selling something. So if they were building something, they were building a team. If they were selling something, they had some space and some shelves. They pivoted, and now look at them, super successful.
I wanted to mention some of the things that we're seeing and stop me if you think I'm missing something. So for me, the number one thing that we see our brands that succeed are starting with their proven execution team. And this doesn't have to be people that are full time on your staff that you are paying a salary. This is being a smart CEO or founder and recognizing that you can be the visionary and you can have a piece of the business that you own, that you know, that you want to manage and be responsible for. But now, how do you create a board for yourself that is full of past expertise of people who have done it and can sit on investor calls with you and talk about why they not only believe in you, but they believe in this business model? It's your advisory board teams, that's your strategic advisors on call for specific things that you need, and it's a trusted C-suite. And that you allow those people to be experts in their verticals within your business and you lean on them and you show up to those investor calls as an aligned team of how you're going to go execute it. I think that it's also a clear consumer traction, but not just velocity. And I feel like that we don't do this to our clients when we're on calls with them, but I think that sometimes in conversations like this, it becomes just like, oh, velocity. But what does that mean? It means who is your repeat customer? Just because you're getting reorders, great, but who's the actual person that's going out and buying it over and over again, not just a retail door? And I think also the smart retail strategy piece, which I know that you guys have touched on. And for me, a real living example that I think Chris and I have gone through is we brought on Rod Willis, who he founded the natural products division at Dot Foods that specifically services the alternate channels. We've always had a really strong retail presence and retail sales team, but there's also other ways to penetrate the market other than just traditional retail. And I think so many founders, like, of course, everyone gets excited by a big box name brand or retailer. But like, where are some of the smaller places that you can go prove this concept and get that market data? And you look at brands that have done it in the CPG space, Chobani, Highball, those brands all started food service and then went into traditional retail. And having Rod on the team has been amazing because he's helping us recognize these places, whether it's college campuses, corporate campuses, travel retail, places that are oftentimes overlooked that don't overlook them because everyone's fighting for the same chain retailer. That would be my three things.
Yeah, and I think that's the same thing Chad said.
Yeah.
There was a nuance there. He said, "You bring me 35 restaurants, right? Like that on-premise thing." And the reason he said restaurants is because the velocity is extremely high. If you have a THC beverage on a menu in a restaurant, I bet you the velocity. I mean, you tell me, 5 times more than a retail shelf if you're in a restaurant. Yeah, like this is where again you have to go. What are my goals? And what's my strategy? That strategy piece, yesterday, after the show here, I walked into an ABC just down the road. It was huge. I mean, the amount of brands. I was standing there, a woman walked in with her dog, and she said hi, and I was like taking pictures. And I said, "Are you a big THC person?" She goes, "Yeah, I usually, toke a joint and have a glass of wine. But what I'm finding now is I'll toke a joint and take one of these THC beverages." There's a brand out there called Wonder, and I know the CEO, Lexi, pretty well, back from our shared campus days. And she goes, "Do you know any of these brands?" I go, "Yeah, I'd try that one. That's my friend's, and it's really good." And we talked about dosage, and I said, "Are you lightweight?" And she goes, "No, I have a joint every day." I'm like, "Well, those are the 10s." And she goes, "Good, I've been drinking the 5s, and I don't really feel them." But, it was just interesting because I saw that huge wall, and I was telling a client that's just now launching, and we're looking at Texas first, and I definitely want to talk to you, Chad, about this, how and when to come to Florida. But if you're going to go into a Total Wine & More or an ABC, and you just think you can go put that product on shelf in a huge bank, you are so lost because the revenue this THC category is driving, right, within the whole functional beverage set is gigantic. But you have to stand out in some way, shape, or form. So if I went to Chad, if I was pitching Mexico as an example, I'd walk in and be like, "Hey, we went in market, we self-distributor, we're using this other small distributor. I've tested the market in 3 channels. I'm in 20 restaurants, I'm in these liquor stores, and I'm here. And these are my velocities, these are my honey holes, these are my consumers, right? Now I'm looking for a distribution partner that can take my distribution up 10x. Can you tell me where you would take my brand to help us grow together as partners?" And that's how I would go pitch a distributor and actually partner there. And I would have my capital lined up behind that to say, now, hey, if I go get this distributor to sign on, Can you write me a check to go fund this business? And that's how I would be connecting those dots all the way around.
I mean, there's been some really cool examples, right? So I know a guy that in 2024 just smashed through smoke and vape shops, right? Went in with a fridge program, just with his beverage, and 110,000 cases in 2024, right? Like, wow, I don't have a brand doing that, right? So, like it really is just a great time to be alive, folks. But it really is a great time to like do something because, there's this huge shift, right? And like what? Alcohol's lost $854 billion, right? That's the last number. $854 billion wiped out of alcohol stocks in the last 2.5, 3 years, right? Like it's a big number.
Still in a better position than pre-COVID. Is the spike.
Yeah,
I
yeah.
think there's a lot of companies. The definition of a spike is that it then has a.
If you're going to pay me to stay home and drink, I'm a happy boy, right? That's what happened.
In Finland, there's a term for that. Not wearing pants, staying home and drinking. If anyone knows the Finnish term, I'd like to know it.
Is that
use
called
it more
being
regularly.
an Australian? No, I'm joking. Joking. But yeah, look, I think, sorry, I'll take it serious. That gummy kicked in. So I think it's really important to see that there are niches within these niches. And when I'm saying go deep, it can be in smoke shops. It can be restaurants. Like I had a cool meeting yesterday with a guy that has 30 cinemas. I mean, yes. Like, yes, come to me that you're the alternative beverage. It's not just about hemp, like I'm looking at bringing in functional, so just straight mushroom products. I've did a deal with Chaser Water. And look, that's a great example. Chaser Water, right? Like it's with Celtic sea salt. Yeah. But they're doing 6 pallets a month on premise. I want that business because I want to come in behind that and give those on-premise businesses the rest of my portfolio. And that's why Pepsi buys you, right? That's why a big brand buys you. It's not because of what you're doing. It's because of what they can do with their preloaded 100-year-old distribution where you think you're kicking ass because you're doing, $10 million, but they know that you're $1 billion inside of their machine, right? And so all they need to see is that you can actually knock it out the park. And I think sometimes you guys get hoodwinked when you look at top line numbers when you should really look at, sales per door. Because people do dumb deals getting into ABC's 127 stores. They make no money off it, but they go, wow, we put 2,000 cases through ABC, which we got paid for 3 of them. So it's not just about that top line. I think you guys are getting smarter, right? Like everyone here doesn't sound dumb to me. Like I'm the dumbest guy here. So, you're looking for, sometimes I think you're looking at some of the wrong stats. And so that's why I've had at least 4 or 5 family offices just send me what they're looking at and ask me my opinion. And I'm happy to provide it because ultimately I just want everyone to win, right? Like I just want,
Yeah, and you're absolutely right, Chad. I think investors and distributors are in a position, it's been a leverage shift. They can be as selective as they want. If anything, distributors cutting brands,
I'd had to let 10 brands, like it was the worst thing ever. I didn't want to do it, but Christmas Eve last year, I wrote 5 brands an email saying you need to find another distribution partner, and it's because
you couldn't have waited a week.
I could have. I really could have. I was a bit of the Grinch. Not going to lie. But I hadn't. I don't own Mexcor, right? Let's get that straight. I was told I had to kill 5 brands. I had to kill them today. So, but like all of those brands had no reps in the market. They had no liquid to lips money. And like, end of the day, like if you're less than 1% of my revenue, you're in a very dangerous place.
And final point before we head to Q&A. Again, I played devil's advocate. That's my differentiator. We talk a lot about what investors want, but I want to flip it. If you are a founder or a brand seeking funding, what should that brand be looking for in an investor, in evaluating the investor, and what trouble have brands or founders found themselves in getting into bed with the wrong capital partner?
I can speak to that from experience. I think the first phase I would always recommend is either self-funded or go get family and friends money, first of all, because They know you, they trust you, they're investing in you as a person. And then after that, make sure that you find someone that believes in your mission. And as Brett said, when they go from the other side of the table, they're on your side of the table as a partner. And I'll give you two examples. My first funder at Zola, they started with $1 million. I ran a acai. We were the world's first acai juice, coconut water, 20 million, sold to a private equity firm. But we did friends and family money that took me 18 months to raise. We raised $750,000. We went from 250,000, 550, 750, 1.3, 3 million, and between the 1.3 and the 3 million, I got $1 million in capital. It was a New York bank that owned real estate and banking, some of the most consistent returns out there in terms of financial models. And they were big, largest privately held bank in the country. They started a private equity arm. They invested in 5 brands. I was one of 5. They brought in a team to do it. I was the last one standing in their portfolio. In 8 years, I reported into 8 different executive directors. And I never had one meeting where they eventually owned the majority of our business at this time. There was 3 people, and I had 1 outside board member, 5 of us on the board. I didn't have one meeting where every single board member sat through the entire meeting. It was infuriating for me. Now, they put $15 million into my company, so I kept going. And in fact, the very head, the CEO and chairman of the board, they had a very big partnership with a celebrity, a $300 million company. He's like, Chris, I'm gonna have you talk to them because I trust you. And so this guy calls me like, hey, I'm supposed to talk to you. And I'm like, so tell me about your business. Like, well, we're $300 million in licensing. I'm laughing going, I'm like a fraction of that. Why is this guy talking to me? But my investor trusted me, but I didn't get the support. When we got purchased and bought, we were bought by a private equity firm, all of us. And they re-upped me in equity as a CEO. I had another business, cannabis beverage company, by the way, that I had $5 million raised on the side. But it was better for our investors for me to stay on with the company. The company name is Carp Riley, and they invest in people. They come on your side. They invest in people. They invest in stories. They have patient capital. And that to me was awesome. When I went to them, we had a lawsuit as an example. They said, Chris, like, what do you want to do? I'm like, fuck this. Like, I'm digging my heels in. And it was organic evaporated cane juice, and it was all the people that went after tobacco, and they hit Chobani, they hit Costco, they hit Whole Foods. And I said, I just want to tell these guys no. And so I found a lawyer, long story. But they were on my side of the table, and while other people were paying millions of dollars to settle, we settled for like $45,000. So to have an aligned plan and where you're going and setting the right expectations up front, and then be communicative with your investment partner, ask them, what do they want to see? At what level of depth do they want to know? Do they want to help you solve problems, right? What does that monthly dashboard look like? But the communication between an investor on your board and the management team, to me, is critical. And one other tip I'll say is, what we would do is build a dashboard of our business, and that was our internal dashboard, and we would share that same dashboard with the investor. So that way they just saw on a monthly basis what we were doing, and so there was no surprises. And if something came up, it was that special call to the investor, because at the end of the day, it's about trust. Because one thing I'll guarantee you in beverage, you're gonna have problems, whether it's a lawsuit or getting canned on Christmas Eve from a distributor or whatever else it might be, right? There's gonna be problems. So the question is, how do you react to those problems and how do you fix them? And if your capital partner is in cahoots with you there, it's going to be a much better journey for everybody.
I think, and funny enough, we invested in a company that these guys founded. I think we're the only outside investor, and we're probably pretty early in a THC drink. Because I remember the Kaliba thing and the whole, it was a zero. Like, I don't dislike them. Like, we're aligned. Like, there was things that we probably didn't see and didn't forecast, but our life went on. And I think that's kind of the thing here. The theme is, Chad mentioned like a $2.5 million beverage, and you probably have in your bags beverages that when you leave here, no one's gonna fucking care about. But people like you and you guys can make those beverages kings. Like, you become kingmakers. We're talking about like small money, and yes, the founders, it is personal to them. So I think that's kind of that I wanted to hit on when you asked the question. Founders should ask what an investor is going to do. Like, we're not just like rich uncles or a drunk guy at a bachelor party, like giving money out. Like, you should interview people. you should ask them what they're going to do. Are they going to bring an alignment of a board? What's the corporate governance? Do they have connections to retailers? Do they have people like here sitting down? That's important. And really know your audience too. Like, again, we were investing in a lot of stuff. We were also investing in CPG. But if someone doesn't invest in the space and they think they're going to be an expert in the space, then forget about them. Just move on.
Red flag.
Well, it's value add capital too sometimes, right? So what Brent just said there too is important, which is what is the investor going to do for you? Is it just capital? And maybe you don't need anything more than capital. But I remember in the gluten-free market when Rudy's was coming, Stripes invested in them. Right when the whole gluten-free thing, it went from, gluten-free products went from tasting like cardboard to actually tasting good. And so Rudy's came into market and Stripes had really good D2C chops. And they hit right at the same time. It's right when social media was starting to take off. So they came in and invested and accelerated that brand like crazy. So a lot of these things all have to come together at the same time. So I would always ask capital, hey, if you invest in me, how can you help me accelerate and add on to areas you might not be strong at? Do they have distribution contacts, right? Does Brent know Chad? Hey, I can introduce you to Chad at Mexico and put you in front of them in a week because I sat on a panel with him. Or, hey, I've got these marketing people that could take what you already have as your core team, and man, they could help accelerate that. So that dual value there is oftentimes very, very powerful.
And I want to make sure we have time for Q&A. So just, please, if you have thoughts.
There's one quick exercise that we do with our clients, and I think that they're always surprised the first time that we get on the call and I tell them what we're doing today. And of course, you always want to have a list of your false and genuine objections before you go into your first investor conversation. And keep this as a running list. Whenever someone has feedback for you, keep a list. Is it a false or a real objection, and how do you answer to that? It also helps you align your team so that you all speak the same way and you guys don't get caught up on a call saying different things. But also have your list of the questions that you're going to ask the investor. And don't feel afraid to say to them, listen, this isn't a transaction for me. This is us starting a relationship for the next 5 to 7 years. And none of them are mad about that. And you can be open with them. Do you guys have operator experience? What does your governance look like? If I have a slow month, what does that mean? The LPs that you have in your fund, how did you get those LPs in and what did you promise them? Because if they're expecting hockey stick growth and you're operating at under 35% gross margins, you're not going to be able to give that. And it's always okay to say to them, listen, I can't meet the expectations that you have at the table right now. Let's stay in touch and put them on the back burner for yourself for now, and then reach out again when you're in that next phase.
And while the crew will be around afterwards, I'd like to open it up to Q&A. I think any questions you guys have will probably be on the mind of other attendees.
Hey, good morning. My name is Jacob. I'm the formulator and currently manufacturer for OG Sodas. We're a newer company, and I really appreciate you guys taking the time to talk about this morning. Chad, you said two things when you first started, taste and nutrition. I have been hearing throughout this show a lot of consumers walking around going, I walked up, they said the nutrition of this was good, it's good for me. I looked at it, it's not. I don't want to drink it. So in terms of investors and moving forward, how crucial is it that the taste is actually there and that the nutrition is real?
I think that was meant for you, but to weigh in on a little piece.
We
So
took
from
away Chad's microphone.
Oh, there you go. From a supplement perspective, I think it's interesting that this is something that's relatable and translatable, not just to the beverage space, but when you're a supplement brand coming into market, and it makes sense for functional beverages now, there's two main hurdles that you're up against. One is convenience. Can you get the consumer to take it? So that's your taste piece. And in the supplement space, it's, can you take that many pills, whatever. Two is efficacy. So once you got them to take it and they enjoyed taking it, did it actually work? And that is a tried and true model that makes for a successful supplement brand. And I think that if the functional beverage category adopted that as a proven model, there would be more successful brands.
Yeah, and I would just say, as someone who invested in the world's healthiest tequila drink or the world's healthiest alcoholic drink made with tequila, you can't just wear your nutrition badge on your sleeve because ultimately no one gave a shit. right? And high noon destroys us every goddamn day, right? So I would say that the consumer in alternative bevs are way more interested in what's on the nutritional panel than I think any other consumer. But like don't lose the forest through the trees, right? Like people don't know what's on the can is poison, right? I, as a distributor, if I don't like what's in your can, I don't bring you in. I don't care how big you are, right? So people go, well, why don't you do kratom? I'm like, well, I'm not sure I like that shit, right? Like I've read some bad stuff and I've had some various stuff, but if someone makes a clean version of it that doesn't, do what it does, I'll think about it. But don't think that your really, really clean product is going to save you. It still has to taste good, right? And I don't want people to fall into the trap of like, and like I shit on brands all the time because it's fun, but at the end of the day, the consumer doesn't know that preservatives are really, really bad for them, right? And we all take much, much longer to decompose these days because we're full of preservatives, right? But I made a drink without them and no one cared. I thought the world was going to like slap me on the back and give me no one cared, right? So the market's not always where you want it to be, and I think education is still key. There's a drink out there that has no solvents in it, and they're really proud about it. I'm like, hey, no one knows what the fuck a solvent is, mate. What's a solvent? Do you know what a solvent? I don't know.
Well, and if the rest of them are hiding it because it's less than 2% weight over weight per unit and
don't
they're
have to
using the
show it.
solvents anyways and never have to put it on the label, then do you really have a differentiator? Maybe not.
Yeah. So again, I think it's important to like obviously have your flag in the sand, but don't die on it.
Gentleman with the green hat.
Hi, my name is Harry Groom, and I'm the founder of Melt THC Infused Ice Cubes. And you talk about sweat equity. I've been in a sauna for the last 5 years. We're looking for a strategic and financial partner, and I got to be honest, why would anyone right now invest in a hemp beverage given the November 13th deadline? I mean, I hope folks see something that I don't, but it's been very slow, and I just don't, as on a logical level, why?
Can I ask you a question? How big are you today? Like, what does your distribution look like? What are your
We're
sales
looking
today?
for, we launched in the regulated market in Massachusetts, did a test in Miami over December and then online, and we're looking to kind of revamp and find a new partner.
Yeah, so you're at that family and friends rage stage.
We've already been through that for Massachusetts.
Got it. Do you have a proof of concept you can build on?
Absolutely. We're in 50 doors in Massachusetts, right in the dispensary.
Yeah. So I think there are people out there investing. Willie's just got $15 million. Now their proof of concept was huge D2C sales and an $80 million run rate. So, and a big celebrity.
Yep.
So I think it's who you're talking to. I had a conversation this morning over coffee about the regulated market and where it's going. There's multiple schools of thought out there. Some people are saying something's going to happen. A lot of people are saying it might get kicked down the road. But this was someone that was quite knowledgeable, and the thematic back was no one really knows, and so there is a risk. So what I would say is there a way that you can, number one, find someone small enough, get enough capital to go do one more test-proven market. So if you're getting out of the regulated market, coming into the hemp THC market, a lot of brands are doing that just because of the size and scale of that. So I think you need to be in front of the right investment partners. They're likely to be smaller. And it sounds like you're kind of building that story still to some degree. So go get $250,000 in capital.
That's what we're looking for.
Yeah.
For Miami. I mean, like Chad was saying, it's not a DMA. It's we're starting in a small market.
Yeah, I'd find $250K. I don't have someone in Florida, in Miami. I'd love to talk to you and see if we do. But because it's an interesting concept. But I think that getting a small amount of capital, get your proof of concept, tee that business up, and when the regulations change, God willing, all of a sudden you're positioned to go get some bigger capital.
Thank you very much.
I also think understand what assets you have. Is it data of people that you've collected information from? Is it some sort of manufacturing capability? Is it intellectual property? Is it your, I don't know, whatever that is for you guys that you offer that no one else does, obviously using that to raise your own money, but also who else needs that that's adjacent to you, that's a similar size, or maybe a little bit bigger. Maybe there's a licensing play.
Or a portfolio. I mean, we're a novel item.
Novel always makes me excited, Chris.
Well,
No,
right-
Does
now-
it make you excited? I mean, 'cause
In
I-
Massachusetts right now, you're working with a licensed producer that has a.
No, we're out of Massachusetts. We're out of the regulated market.
You're in the regulated market.
No, we're out.
Oh, out. Okay.
We were in for 2 years.
Got it. So you were just making a licensing revenue.
No one was buying beverages in dispensaries in Massachusetts.
Right. Right.
And you can't buy them anywhere
Right. But
else.
I think that with that regulatory risk, I agree with everyone here. Bootstrap it,
Yep.
which you are.
Yep.
Find capital for growth. Sell, restock, sell again, and then, see what happens. If this regulatory kind of framework ends.
Yeah. Right.
I have a friend, we should talk. I have a friend that has a very clear ice cube company that they're now delivering directly to bars because they don't have the space to store them. So I might
This
be
is
able
sold
to dig something
liquid.
up.
This is sold liquid, so it's even.
Oh, sold liquid.
Yeah.
Interesting. Yeah, I'd love to talk to you.
Okay. Cool.
So
Thank you very much.
Thank you. If this were an award show, the string music would be playing very aggressively. So thank you all so much for attending. Let's give it up for the panelists.